JB here. Hope everyone's doing outstanding. March 25th, 8:58 on this fine Tuesday morning. Talk quick about the market. Some names I'm looking at go from there. S&P futures up about 0.2%. They were red overnight, slightly in the red, bounced around in the morning, and then at about 6 o'clock start to head into the green. SPY hit 576 just a little while ago. Pulled a tad back. VIX is down here at 17, and oh my gosh, it's been a nice 2 days. I wouldn't even call it 2 days because Friday, uh, I mean, you could have made the case that the market could have tumbled, right? All the way down to 558 on the SPY. Uh, just no news catalyst to speak of, and then we reversed, and then an end of day surge pushed us into the green. Just some continuation yesterday on reports that maybe the tariffs aren't going to be as they're going to be more targeted, not cumulative, and maybe not as strong as expected. I guess that's some of the rally. Some concern, and April 2nd is when those are going to be unleashed, right? The tariffs going to be unleashed. My concern is there might be maybe some surprise on next week. So something for next week. But for now, today we have consumer confidence, the CB board, what the conference board, I forget, it's different than the Michigan, but that comes out at 10 o'clock. I'm sure it's going to be a weak number. I mean, if you look at their estimates, do I have it? I don't even know if I have it up here. Yeah, I guess the estimates are for 94.2. Last month in February was 98.3. And then in January, December, November was all hundreds, 104, 111. I don't even know how that index works in regards to the percent, the hundreds. So it looks like it's going to be probably the lowest number. You go back to January 2021, it was 87, 88. It's probably going to be in the 80s. That's my guess. But we'll see how the market reacts. I mean, if this has been all about the consumer confidence and the soft data, like the Fed was talking about, I mean, it's hard to think that this hopefully doesn't put a kink in the rally. I still think 581, 582 on the SPY. I think that's the next target. You take a look at some of the names on the S&P trading over their 200-day moving average. Only less than 50% of names they're still under their 50-day moving average. So I think that means there's still room for upside. Um, yeah, and it just seems like there was so much negativity. I think there still is a lot of negativity in the market. Like people still think that maybe we have a bear market's impending, and this is just a pit stop before it. And maybe they're right. I mean, but we've seen this year after year after year. Um, Trying to think what I was looking at earlier on some of the charts to see what happened back in August when we had that big carry trade fiasco with the yen carry trade, and the S&P dropped all the way to 500. Within like 2 weeks, the SPY was back at 550. So I'm not saying we're going to have a 50 point bounce here and get to 620 on the SPY, but I've been saying it's passive money. It's all about, you know, people look at say, how can the market should be down to 500 on the SPY or whatever, but there's so much money at work. It's hard to get these, even if we do get down there at some point, there's going to be bounces. So if you're not playing the pounces and you're just in the push, you get destroyed. All right, so that's kind of the overall market. To me, if we do somehow get some reversal here today, I'd be watching that 200-day moving average, 570. The 200-day moving average, 1, 2, 3, 4, 5. I think we spent 10 sessions underneath it. So as long as we hold that, I think that bodes well. So that's the overall market. And then the VIX. I mean, it was I wouldn't call it a telltale signal because obviously when the market was weak on some days, we're down 1%, and the VIX didn't really look like it was budging. Uh, Not good being calls on 1% down days, but it kind of helps give at least a little confidence that at some point we would have some type of bounce. And then just the amount of stocks trading over their 200-day moving average starting to head in the right direction. And you have to think if there's continued momentum, there's still some upside there. All right. So that's overall market. Then some individual names. So yesterday I was looking for some names that might have been oversold on the tariff concerns, and one of those names is Shopify. I was looking last week as well because I mean it's a Canadian company. I think some of that the reason it's been sold off is because of that. So it started to bounce last week. Then yesterday was right near its 50-day moving average. I figured once it broke over that, maybe 115 or so, and then so I got the strikes, the calls. It got over 110, and then it just kind of struggled. It hit a wall. Still closed up over nearly 5%, but I didn't want to see the premiums come out of the strikes. Uh, so I closed them out for a small gain. Maybe I'll revisit. I'll be watching again today. But again, similar to some of these names that have been sold off on earnings, there's been so many of them that had really strong earnings reports and sold off regardless, right? Despite the reports. Shopify is one of those names. And Wayfair, another name. I think it's 3 quarters in a row Wayfair has reported monster earnings. and the stock is closed up after the earnings for the last three reports. And then just take a look at this last report and look at the chart at the end of February. No news, no catalyst really, and the stock was $50, and then pretty much cut in half. So all the way down right near that 30 handle, found a bottom last week, and then you see the bounce on Friday, another bounce yesterday. I think it heads near its 50-day moving average, which, it's 41.72. I got the $40 calls. I'll probably look to close, depending on what those open up today. I'll probably look to close some out to cover costs, because you never know, right? Nothing's a guarantee. And then I'll just hold the rest, and that takes the emotion out of the trade. But I think it trades up near $42 this week if the market cooperates. So that's why I got those calls. And then on the flip side here, ROKU. So I got those spec calls last week. I was able to close some out to cover costs, and I was looking for a bigger premium on the calls at the open. I think the 85 strikes were at 70 cents or so at the open. It hit all the way up near almost $82 and then gave the games back. And if you've been trading or following ROKU like I've had over the last couple of years, it seems to have this pattern where it sells the gap. So I didn't want to be in a spot similar to Shopify where I lose the premiums. So I closed the last out for about 150%. Still watching, right? So, I mean, it's 50-day moving average, 80-60. If you can hold that here today, maybe I'll look for some strikes into next week, take out some of the possibility of premium erosion. And then if it resumes, maybe it trades up into the mid 80s, if not higher, into next week. So still watching that one. Of course, my thoughts there, ROKU, so I'm not going to go too much on that one. GameStop. So I got the calls last week on Friday, and the stock was in the 23s. It goes all the way up here, closed at 25.61, and the calls are flat. So kind of disappointing. I was hoping for a premium build to be able to close some of the calls out to cover costs to ride the rest into earnings today, but looks like the market gods are not cooperating. But what are you going to do? I'll probably, because they're inexpensive calls on a risk reward base, I'll probably hold them into the close here today, pending any kind of squeeze. My plan was, I was looking to close some out to cover costs or all of them, and then maybe get some later dated strikes. But looks like I won't have that plan. I don't want to have too much risk into the report. I think there's going to be some kind of catalyst. So if you look, they updated their investor relations website on March 20th. And then if you go into the code of it, the CSS or the HTML or whatever it is, you can see there's actually a header that says mergers and acquisitions. And I mean, GameStop hasn't done mergers and acquisitions. They have a $4.6 billion market war chest, of 4.6 billion in cash, pretty much no debt. It's $11 billion company. Obviously, it's a declining business. So it's not like I'm buying GameStop as a growth story, right? But I'm looking at, if you look at Ryan Cohen and Chewy, his job as CEO is to return shareholder value. And he's not going to do it by turning GameStop's business around, right? I wouldn't call it a dying business model, but at some point, unless it just, so they'll have to do something else. And I don't think it's be buybacks or dividends, although they might be able to do some of that. It's got to be some kind of catalyst. I don't know, we had the picture with Michael Saylor. Is he going to do some kind of crypto reserve situation, crypto treasury or what have you? Is he going to buy some other crypto? Is he going to announce a meme coin? Who knows? I think there's going to be some catalyst today. So despite that, I mean, you look at the chart and GameStop's right at this 50 as well. 25.80 is the 50-day moving average. It hasn't traded over that since the start of the year. And I mean, it was $34 to start the year. So I'm not saying it's go back to $34 just on earnings, but I think there's room for upside here. So that's GameStop. That's kind of thought process behind that. Intel disappointing. If there was any day that it should have rallied yesterday, I mean, all the names were rallying. You take a look at AMD was soaring, and there's Intel laying an egg pretty much flat yesterday. Going to have to find some footing here, or I hate to say that it's going to break down under $20 again, but if it does find weakness, want to see it hold 23.76. But I'll just continue to hold my April strikes there. And then other names I'm watching. I had those DELL calls last week. I was able to close them out for some profits. Still a great story, right? So they're still doing buybacks. It's a great fundamental story, and it's substantially off its highs. And you take a look, especially considering some of the other names that have run. It really hasn't. I mean, it was just barely under $90, but I would think it would have to be trading substantially higher. So that one, 107.85 or so is the gap fill. I think it heads up near there, so I might look for some strikes on that one. And then some of the other names, I mean, the XYZ calls I had last week, I'm still watching that one. One of these days, it's going to have a huge breakout. It's 50-day moving average all the way at $73, or actually the 200 days at 73, the 50 days all the way up at 74 and change. Especially if Bitcoin, I mean, it's down today. Was it down 2% earlier? Yeah, Bitcoin's down 1.2%. Was down more than that earlier, but you have to think that that one's going to start to trade up and bounce. It also had great earnings, and it's XYZ is on its way to profitability. I mean, I think it was the first profitable quarter, but anyway, so I'm not going to go on a rant on block, but don't be surprised if I had some strikes there. And then take a look at Restoration Hardware. I mean, it was 219 when I was looking at the calls last week, and here it is all the way up. It was at 261 yesterday, still closed up 5% when it closed at 257. It's just the premiums, the spreads are so tough that even if I got an entry on it, if you want to get out, it's almost impossible. Not impossible, but you're automatically going to take a loss on it, right? So that's not the type of trade you want to go in, where if you need to get out and there's no liquidity, so you're going to lose money right off the bat. So it's tough to rationalize the risk reward. But if I could find an inexpensive spec call to trade from move, maybe up to 270, 280, I may do that. And that's it, folks. Again, I always say don't have my bear suit on, don't have my bull horns on per se, but I'm more open to a bounce or a continuation of a bounce. My worry now would be if we rally too much, that maybe some disappointment into next week. We do have with when the tariffs are unleashed, right? I'm sure there's gonna be more rhetoric, and I'm sure, like, if you're gonna start this tit for tat tariff thing, you want to start out high, right? You don't start off negotiations at the lows. Say, hey, we're gonna do a 1% tariff on your goods, and then negotiate it up to 5%. No, you start at 5%, negotiate it down. So uh, that would be some of the concern. We do have PCE data at the end of the week too. I don't know if that will move markets much, but again, you got to be worried about surprises, right? So if the CP board consumer confidence comes out at 10 o'clock and massive disappointment, low 80s or something like that, I mean, the market's going to react negatively. And then you have to worry about the PCE data. If this insanely hot number, I mean, probably not good for markets. So, but Mark has been good to climbing a wall of worry. I won't be surprised we get up to 582 in the next couple of days. I'll be watching those. Have a great day, folks. I'll be back. Rock and roll.